Good evening, everyone. Welcome to WealthWise 2025, Week 11, the inflation-proof wealth strategy, building financial security in uncertain times. This is Dr. Rhonda Farrell, the success strategist, bringing you Week 11 of WealthWise 2025 series. Over the past 10 weeks, we've built a strong foundation for financial independence, covering everything from multiple income streams and AI-driven investing to scaling wealth and securing long-term financial success. But one major challenge continues to affect our financial future, and that's inflation. Rising costs of living, fluctuating interest rates, and economic instability can erode wealth if we're not prepared. So this week, we're focusing on inflation-proof wealth strategies, how to protect and grow your money despite market volatility. A quick recap of the key topics from previous weeks. Weeks 1 through 3, financial goal setting, wealth building mindset, and investing fundamentals. Weeks 4 through 6, passive income streams, financial independence, and smart money management. Weeks 7 through 9, AI-driven investing, wealth creation trends, and scaling financial growth. And last week, week 10, creating sustainable long-term wealth through diversified income and smart investing. All of that leading up to this week's focus of how to beat inflation, protect wealth, and position yourself for financial success in uncertain times. If you've missed a session, don't worry. You can look for us on YouTube. It will be under our Global Innovation Strategies YouTube channel with a playlist for WealthWise 2025, and you can join the discussion on LinkedIn for WealthWave 2025. So the first thing we want to do is understand inflation and its impact on our wealth. So why is inflation a wealth killer? Well, first, because it erodes our purchasing power. Our savings today may buy significantly less in the future, i.e. tomorrow. It could increase the cost of borrowing because interest rates rise, making debt more expensive to carry in the short, medium, and long term. And it can impact our investment returns. Fixed income investments may not keep up with the rising prices. An example, if inflation averages 3% per year, a 100% nest egg today could be worth 40% less in 20 years in terms of purchasing power. So an action step for you to take is to review your savings, investment, and debt strategies to ensure they are structured to withstand inflation. The next part is best inflation-proof investments, because there are certain assets which tend to outperform during inflationary periods, helping investors preserve and grow wealth in the long term. There are fourfold that we're going to talk about tonight, and that's 1, real assets, real estate, farmland, and commodities such as gold, oil, and energy. Stocks and equities, companies with a strong pricing power, such as consumer staples, healthcare, and tech. Inflation-protected securities. We can look at Treasury inflation-protected security TIPS and I-bonds. We can look at alternative investment types, such as cryptocurrencies, private equity, and income-generating assets. So an action step for you to take this week is assess your portfolio. Are you holding assets that better help you hedge against inflation? Third, real estate as an inflation hedge. Rental properties benefit from rising rents, helping to increase cash flow over time. Property values tend to appreciate in the long term, offsetting inflation risks. And real estate investment trusts, or REITs, allow investors to gain exposure to real estate without direct ownership. So, challenge for you, if you don't own a real estate portfolio yet, explore fractional investing through REITs or real estate crowdfunding platforms. Fourth, smart debt and saving strategies to beat inflation. You can lock in low interest rates on fixed loans before rates rise further. You can pay off high interest debt quickly because inflation raises your borrowing costs. And you can build an emergency fund and a high yield savings account to maintain liquidity while earning competitive interest. So, action step, check the interest rates on your savings, credit cards, and loans. Can you optimize your debt and savings to minimize inflation's impact? 5, the future of inflation and how to stay ahead. Global economic shifts, supply chain disruptions, and interest rate policies all impact inflation trends. Investing in skill development and high income opportunities is just one of the ways to stay financially resilient. And mindset matters very much. Wealthy individuals don't fear inflation, they adjust and strategize and pivot accordingly. A discussion area for you is how might inflation have impacted your financial decisions in the past year? What adjustments have you made to date? And what further adjustments do you have to make or pivot through to allow you to gain maximum success during this uncertain time? So your inflation-proof wealth plan and action steps for this next week are to diversify your investments, add inflation-resistant assets to your portfolio if you've not already done so, evaluate your savings and debt strategy, adjust for rising rates and inflationary risks, and explore real estate or alternative assets. Protect and grow wealth beyond traditional stocks. So engage with us on our LinkedIn discussion page for WealthWise. What's your go-to inflation hedge investment? We want you to share that. Watch the session on YouTube and join us next week for Mastering Financial Resilience and Long-Term Wealth Creation. Again, this is Dr. Rhonda Farrell, the Success Strategist, signing off from WealthWise 2025 series, week 11, the inflation-proof wealth strategy, building financial security in uncertain times.